Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar fails to break out of the range of 76.35.95 overnight. Having started the session around 76.60, the Aussie slowly grinded to the upside and printed a high of 87 before backing away from the 95 resistance. Overall, the market is still somewhat on the bear case, even though that it was slightly subdued from the release of the US Federal Reserve November interest rate announcement. Nevertheless, from a stochastic point, we could see another upside test. It is still viewed towards 76.95 or even towards 77.45.55 as a sell zone. Overall, I expect to see the market to decline towards 76.35 and beneath there targeting 75.80. The euro overnight still appearing to have difficulty to gaining momentum to provide the rally to the 116.65 to 117.05.15 area. Overall, it is expected that the market will be to the bear case as the US dollar strengthens. Overnight, the Fed kept interest rates unchanged, as widely expected. However, the central bank did leave the door open for a December rate hike. There was little to this post-meeting statement on Wednesday to indicate that the Fed would hold off on any rate rise again soon. Still to come, we've got Trump to pick who's going to replace Janet Yellen, and at this stage, the Wall Street Journal is aiming at Jerome Powell. So this should be announced anytime soon. So from a technical point, as I said, the dollar should increase to the upside. Therefore, we should see a decline towards 115.95, but may find buys from 115.5. The dollar yen story once again takes a challenge to the upside and breaks above the 114 handle. However, towards this level, I do heed some caution because we have seen a clear rejection at least 4 times. Therefore, we could see the market pull back towards minor at 113.5 with the base holding at 112.80. Now, with that being said, though, if we get a break above 114.55, then this would give further scope towards a 116 target, but it doesn't look that at the moment, purely from the technical case. The pound not as strong overnight and wasn't as forthcoming when it broke above the 133 handle. With the retreat currently in play, I still heed some caution not to be short, as we do have the Bank of England's rate decision tonight, and I do expect to see Mark Carney to come out with at least some kind of hawkish statement to keep the pound rallying on towards 134 to 136. Any weakness should find dips towards 132.20 as a buy, and you can see from the technical point the market is quite clearly in a bullish sentiment. Interesting that the gold did break above the 1,276 resistance and got to a high of 80 and backed away from the 81.83 resistance and now looks for a temporary pullback, but likely to find demand from 65. Overall, I still feel that we could break beyond 81.83 and look towards 1,290. Well, as clearly indicated, we could see a rejection from this region of $55. Well, we did. The market clearly backed away from this level and now looks back towards the uptrend coming in at 50.85.90. What did give the market a little bit of bearishness was the fact that crude exports offset data showing supply of US crude oil and gasoline declined more than expected. The dips in oil prices comes amid as growing expectations for an extension to the output cut agreement lifted crude to an 8-month high, but still there is some speculation there. But from a technical point, this level is a key level, and as long as we don't break above 55.60, we should pull back. That being said, above the 55.60 level would indicate a further rally up towards 58.62. So that wraps up my daily video. Thank you very much for joining me today. I hope you have a wonderful day that's ahead.